Good morning, everyone. Welcome to the morning meet of IndiaNivesh. This is Mehul Kothari from the research desk. Today is 29 Jan 2020, where the domestic markets continued their southward journey for yet another session yesterday. The index Nifty spot started the session on a flat note to register an intraday high of 12164. However, the selling pressure aggravated as the day progressed, dragging the index below 12,100 mark to close with a loss of around 63 odd points. Meanwhile, the Nifty Bank Index lost another 76 points from its previous close. Initially, the market breadth remained in favor of advancing counters during the first half, but turned negative as the day progressed with 504 advances versus 1149 declines. On the sectoral front, apart from Nifty IT and Nifty Financial Services, all other group indices ended in red. Among the losers, Nifty Metal and Nifty Auto counters ended with significant cut. The broader market indices like Nifty Midcap 100 and Nifty Small Cap 100 ended with marginal loss. On the derivatives part, once again in index futures, FI remained very bearish by adding fresh short positions. Also, there was a small buying in index futures, but the selling was quite high. However, in index option also, if we see, they added further bearish bets by buying some put options along with selling call options. So in rupee terms, FI sold index futures of around 541 crores, while in index options they were sellers of 549 crores. In cash segment, there was huge selling by FIs of around 1358 crores, while DIs bought equities worth 712 crores. So basically, yesterday's price action of Nifty future was bearish, but there was a rise of open interest by 0.5%. The volumes were very high, but that indicates that only intraday participation was there. Nothing was carry forwarded. The premium of Nifty future is now at 12 points from 6 points. The PCR has now cooled down to 1.00 from 1.66. So previously, when we witnessed that when the PCR was 1.71, we warned about the selling in index. So we witnessed some correction in the market and PCR again returned to 1.00. Then again a bounce was there from the levels of around 11,920 odd levels, and Nifty bounced towards a new high of 12,400. So looking at this picture, PCR of 1.00 with a significant open interest at 12,000 strike put option, we feel that if 12,000 is not breached, then again a bounce of around 150 to 200 points in Nifty cannot be ruled out. So overall open interest on the downside is at 12,000 strike put, it's of 3.4 million shares. On the upside, 12,200 strike call has a significant open interest of 5.6 million shares. So as of now, the range is 12,000 on the downside to 12,200 on the upside. Even technically, we feel that 12,000 could be a psychological support. So if 12,000 is held, then a possibility of bounce can be there. But for the day, 12,100 to 12,150 could be an immediate resistance for Nifty. With regards to Bank Nifty, yesterday Nifty breached the previous swing low of 12090 and closed below the same. But Bank Nifty managed to sustain above the previous swing low of 30,600. So this indicates there is some resilience in Bank Nifty. So if unless and until 30,600 in Bank Nifty spot is not breached, even Bank Nifty can bounce a bit towards 31,200 odd levels. So for the day, 30,600 remains support for Nifty Bank. Upside 31,200 could be the next resistance. On the stock front, we are liking Cadila because it is very much near to the support of 268. So closing price is 272. One can look forward to go long in Cadila. Another stock is DMart. CMP is 1930. So even that stock we have already initiated a buy, so one can look forward to it. Third stock is MFSL. Closing is 511. Even that stock is now very much near to the support of 500. So one can buy the stock with a stop loss of 498, sorry, and upside target is 530. So with this we end the technical view. Now I'll hand it over to Mr. Dharmesh Kant. Thank you very much, everyone.
Yeah, good morning all. Global markets, bounced back yesterday as fear of coronavirus subsided. However, as far as the latest update is concerned, from 3,000 officially reported people being infected by coronavirus, it is up to 6,000 now, and the number of deaths have gone up to 132. So the spreading is there, but whether it can be contained or the word on that is still not there. Officially. However, the markets have taken some breather from the falling which they were witnessing. This morning, all the indices are trading up. SGX Nifty is also pointing to a green start. However, Hong Kong, which opened after 2 3 days, has started with a cut of 3%. But for the bulls, a breather has been there. 0.5% has been regained, so it's now down only 2.5%. Not any significant results were not there except Maruti. Maruti, the numbers were already known as far as the sales are concerned, and the growth was of around 2% on the vehicle front. However, blended realization came down from 5 lakh 3,000 to 4 lakh 70,000. At the same time, input prices were high, which hit the margins. They have taken a price hike of 5% for the VS6 variant vehicles, but as far as our in-house analyst is concerned, he says that this is not good enough to take care of higher input prices, which is already there. So he's expecting a bearish scenario on the Maruti. My own sense is that though there can be a 5 6% more price correction from here, but anything around 6500 66 level would be an ideal opportunity to get back into Maruti, because a couple of months of hiccup may be there as a transition from BS4 to BS6 takes place. But let's not forget the fact that in our environment where automobile slowdown was everywhere, Maruti has been able to register a growth of 2% on the vehicle sales in the December quarter itself. So that speaks volume about Maruti as a company and the type of car traction they are seeing. So my own sense is that the analyst may be saying 5,700, but that will not materialize. That will materialize only when the market collapses. Otherwise, it gives you a very good buying opportunity on it declines. So 5 7% price correction may still happen, but you should be buyer in Maruti from here on. Today, again, slew of consumer related results will be there. So, like Bajaj Finance will be reporting their number, Bajaj Finserv would be reporting the number, which would be looked very closely as far as retail growth is concerned. So, private sector banks have pointed out to a slowdown in the retail loan growth. However, these two companies, if they come out with a good set of numbers, so at least some green shoot kind of environment can be seen. However, overall the scenario has been the market may have shrinked a bit, but the good place have been gaining market share in this shrinking market. So let's see whether this is again corroborated by the result announcement of Bajaj Finance and Bajaj Finserv. Scots will be also coming out with their numbers today. And Godrej Consumer Products, these two are in our advisory portfolio stocks, and once the numbers come out, we would be updating you on the same. So the sum up is now the big events are already in line. Tomorrow it would be, I mean, President Donald Trump impeachment process will take place. Then you have F1 expiry happening. Then Brexit is happening on Friday, and Saturday you have a union budget. Market has already corrected. Any hint of bulls taking charge may have a good short covering rally into a play. So that is the expectation, and then we can go into the budget on a neutral stand as far as Nifty levels are concerned. So play with a positive bias. However, having said that, let me also put it forward that any severity of news for coronavirus can derail all this thesis which we have discussed as of now. So that is all from our end. Thank you so much. Have a nice day.